thanks everybody. So thanks Mary John for introducing me. And once again, I just wanted to set a bit of context as to why I'm here and talking about this topic. So I work, my day-to-day job is in this payments domain. I work at Visa in the digital capabilities team, and my role is actually commercializing some of our new technologies in this domain to our clients who are primarily the Asia Pacific based banks and issuers, and to a large extent, some of our merchants and fintech partners too, increasingly. So this is a topic that's quite close to my heart and quite close to my area of work. And I wanted to use this opportunity to kind of share what I think are some interesting trends in this domain and kind of taking a spotlight on Asia, right? Because that's really where most of us are focused on in this domain. At the same time, I want to just also stress that this presentation is being delivered as part of the Chicago Booth Mentorship Program, and it's to be treated as a personal views only presentation and not to be treated as a Visa company official, point of view, right? So with that, let me jump into the topic for today, right? So digital payments. And before we dive into payments digital and where we are today, I just wanted to talk about the evolution, right, in this domain that we've seen in the last many years, right? So payments, if we were to go back all the way in history, originated as a mechanism of barter, right? So the oldest form factor of payments, one could argue, was actually barter, where two people would come together and make a trade and exchange goods and barter something that they thought was an agreeable fee, right? So this could be a bag of rice, or this could be a piece of metal, right? So that's our oldest form factor when it comes to money, right? And since then, we've gone through significant evolution of that form factor. So we more or less are dealing with cash, right? Cash and coins are, though at the same time, being rapidly displaced, as we know, with digital payments. And what's been interesting in the last 12 months, right, especially somewhat due to COVID and this whole pandemic, is there's been actually an acceleration of changing consumer behavior. So what would typically take maybe 10 years in terms of maturity and changing customer behavior has somewhat accelerated in a very short window of time. So in the 12 months, we've seen that the consumers have gotten a lot more comfortable shopping online, right? Customers who weren't in that behavior before are now increasingly drawn to that because of the convenience factor, and also somewhat necessitated to do that, right? Because of constraints around the social distancing rules. So all of that in many ways has been a boon to digital commerce, right? So we've seen that also being substantiated by data, whereby we saw that card not present e-commerce in general has actually lifted off exponentially. And I think there was a question around this, right? This whole concept of embedded commerce, or what we call as invisible payments experiences. So what's happening is that, what do we mean by that, right? So it's becoming quite a buzzword nowadays. So traditionally, payments are associated with a bank or a payment provider, right? Like a Visa making a payment, giving a payment checkout experiences. But nowadays, increasingly, we have non-financial institutions also delivering payment experiences. And this is what we see is a commerce experience that's kind of integrated into the customer's consumption behavior itself. And this can refer to my delivery app. This can refer to my online streaming service content providers app. This could refer to an ad I see on Instagram where I can check out and finish my purchase in 2 simple steps. So from a technology standpoint, what's happening is also interesting, right? So while we can say that the plastic, right, the simple credit card is still around and it's not expected to disappear, right, for many years. But there is an increasing shift from that plastic to tokenized credentials. So living in Singapore, actually, I can get around most of my purchases by just paying online, right, using my credentials stored online, or by using an Apple Pay and tapping it at the MRT, tapping it at the bus stop. So these are what we call as tokenized credentials, right? So the technology behind this is essentially encrypting my 16-digit PAN, which used to sit in our plastic in our wallets, now is tokenized as a secure credential using this technology and is embedded into these points of commerce. So that trend of tokenized credentials is going to soon evolve into more and more Internet of Things having the ability to have payments embedded into it. And we are looking to the next big thing in that space, right? And similarly, with authentication that is facilitated with tools like biometrics, we see that these payment experiences are becoming even more and more frictionless. We also are seeing increasingly a trend for what we call as an alias, right? So what do I mean by an alias? A good example is that my 16-digit PAN number, right? So if I need to send money, Mary Joan and I and Adrian, all three of us go out for coffee, right? And let's say Mary Joan has picked up our bill and I need to send money to her. What's the best way to do it nowadays? Living in Singapore, I think many of us probably use Pay Now, right, which is actually a real-time payment network enabled tool whereby we can facilitate bank-to-bank account transfer. But as a user interface, all I need is MJ's phone number, right? Because that alias is essentially my bank account, which is now resolving into my mobile phone number. And we have the same technology where a mobile phone number can resolve into my credit card 16-digit number, or it could be that my email address can resolve into my banking credentials or my payment credentials. So the point here is that as a customer, as an end user, all I'm dealing with is my friend's email or my friend's mobile, right? So this is a trend that we think is again going to drive more and more adoption of these embedded commerce experiences. And the other thing I do want to call out is, you don't see that evolution graph here, because we do believe that, and this is also an observation, that payments is not evolving in one linear path, right? So in the US, we may have seen a certain adoption curve, and in Europe, we may have seen a certain adoption curve. In India, we are seeing a different adoption curve in terms of technologies. In China, again, it's completely different. Australia might be a whole different ballgame altogether. So what we are seeing is almost a spidery web of payment experiences, right? So there is no one linear journey. So there could be I think there was a question raised about cryptocurrency. So there are different paths of evolution that we are seeing. And it's not necessary that everything converges in one final point, but it's more about the use case. It's more about what is the best possible experience for that particular commerce that the customer is at that moment, that typically is determining the next steps with the future of payments, right? And that brings me to the topic for today and the spotlight that is on Asia, right? So why Asia? And of course, that's home to all of us and close to us. I think Asia is actually very unique in the sense that we've benefited from the fact that we were actually not the first country, region to have modernized payment technology, right? So in many ways, we have the lack of legacy infrastructure like the US and Europe that kind of paved their evolution in more or less, I would say, a linear curve for many years. But in Asia, we were kind of starting ground up, especially in a lot of emerging markets, right? Like even in countries like India, Philippines, Indonesia, which have traditionally had very poor banking penetration or very poor underbanked financial services. There's actually an opportunity for new technology players to come in and ground up deliver services which are now catering to these digital first natives. So these are the markets where telecommunications have paved the way for many of their residents to get access to internet, typically on a smartphone, right? So we do see high quality of data available we see high penetration of smartphones. We see that digital first customer mindset, which makes them very comfortable with shopping online, with using the various modes of apps in terms of consumption. And from an IT standpoint, we also believe that in Asia that we do have a lot of that infrastructure that is enabled by the likes of AWS, Azure, etc., which actually makes Asia very attractive in terms of the back end of it, right? So we have good penetration of data servers from many of the large cloud service providers in Asia, and we are not as constrained by data privacy issues like some of the Western countries. And we also do have a vast pool of what I would say is cheap DevOps resources, right? Which is quite critical when it comes to innovation in the space of application programming interfaces and delivering new apps and designing new payment processes in a fairly agile manner, right? So which is why a lot of fintechs do have their development hubs in the region as well. And we're also seeing a trend of what we call as the real-time payment networks, which is kind of the network of banks coming together and doing bank-to-bank account transfers in pretty much real-time or instant payments. So similar to the fast network that we have in Singapore. So all these reasons to me, is kind of signaling that Asia is actually a very, very primary hotbed in terms of driving a lot of innovation. And I've actually seen this in multiple places, that a lot of the innovation that's now coming out of markets like China, India is now being adopted in the West, right? So it's kind of happening in the reverse order, where a lot of the digital first experiences are created in Asia and slowly kind of percolating into other regions. And I wanted to now spend some time talking about few examples that I think, maybe you're already familiar with many of these players, but I just wanted to stress on the aspect that these, key players kind of tackled, which from a strategy perspective is now becoming a repeatable process that many of the other players are also adopting. I'm sorry, there's like massive thunderstorms happening here. I'm not sure if it's coming in the sound. So
It's fine.
Paytm, yeah, but yeah, Adrian, hear me all right?
Yes, the audio is just fine.
Yeah,
Okay, great.
it adds an aura of mystery when,
Yeah, bit eerie, but good background scoring, I guess. So going back to Paytm, I'm not sure if many of you are familiar with Paytm. So Paytm is one of India's first digital marketplaces, right? So Paytm started out with a very unique use case, which was all about, they identified a genuine pain point for the customer, right? Which was in India, most of, I think over 90% of mobile subscribers are prepaid mobile subscribers, right? Versus postpaid. So what the behavior there is that every time my prepaid balance runs out, I got to run to a nearby store and top it up by buying a paper voucher and then increase my balance, right? So there was always a friction of how do I get this top up done in an easy, quick fashion. So Paytm kind of went head on to tackle that, and they launched a stored value wallet concept, right, which could easily link to the customer's bank account or their credit card and essentially help them top up their prepaid accounts right away, right, with the convenience of using an app, and it's available on their fingertips. And what they did since then was, they saw that there was a huge demand for this prepaid top-up use case. So they solved for this existing pain point, and they slowly started kind of percolating that financial ecosystem around it. So once they kind of drove very high stickiness with prepaid top-ups, they slowly extended that to bill payments. And they were very heavy on promoting cashbacks as one of their adoption strategies, right? So customer that used Paytm to pay their bills was getting, X percentage off on every payment. So that was a tool. That's a tool actually even many of the, new wallet providers do. Like Google Pay just recently launched again with a similar cashback advertising scheme for customers. And today, Paytm actually has a full-on banking license in India, right? So they are considered as a full-on, I would say, proper financial institution, right? While they started out as a stored value account provider dealing with prepaid top-ups, and they are increasingly looking at core banking services now, like insurance, wealth management, etc. So this, I think, is a very interesting case where they identified one very niche pain point and were able to succeed in getting high stickiness. They have over 100 million cardholders on their platform today, right? And then they built an engaging ecosystem around that, and which has become truly disruptive in the Indian market, right? And this is a case study that we are seeing. It's quite unique, and we could draw a parallel with Alipay in China, WeChat in China, in terms of the adoption and the active users that they are seeing. On the same vein, and closer to home, many of us would be familiar with Grab, who again are now getting the licenses to become a payments provider in Singapore. So they've adopted the same strategy where they were again able to get stickiness on their transport services. And now they're slowly extending that to build an entire financial services ecosystem around it. So we do see, sometimes when I go to my nearby store and I make a low ticket purchase, right? It might be a purchase under $10. The merchant actually would, tell me, hey, let's not use the card. Can you actually pay me with cash or use the Grab QR code to pay me with the stored value account? Because for them, for that particular transaction, there is no MDS, right? Which is basically the merchant cut of the share that credit card or a banking backed transaction would incur. So in many ways, I would say Grab is taking on this concept of, okay, I have my Grab wallet, which was primarily meant to just pay for my rides. Now that I see that there is balance of, I have captured my customer's wallet share in this Grab wallet, how can I use that stored value that's residing in the Grab wallet to increase my customer's wallet share, right? Now, how can I get them to spend more and keep them in many ways within that Grab ecosystem? So now they're trying to get more and more acceptance points that gets customers to continue topping up and remain in that stored value ecosystem. So they're also now getting into space domains like obviously food delivery that can be enabled with the same wallet, and similarly P2P money transfers, etc. So that was two examples on the consumer side of things. Another trend that we are seeing is also what we call as the rise of transaction credit, right? So this is kind of like point of sale lending, whereby as a customer, I have, most of us have this bias, right? So if I'm buying something today worth $400, and if my merchant tells me, hey, either you can give me $400 upfront, or you can pay me back in 6 installments and absolutely zero free, like no interest on top of it. So I might be like, hey, why not, right? My the actual pinch that I feel is only going to be 400 divided by 6. So it's much lesser for me as a customer. So it favors this present bias that many of us as a cardholder tend to have, as a consumer tend to have, which is, how do I minimize my spend for the month, right? Because that's how I'm doing my budgeting. And this has led to a lot of, and this is, I would say, a new, relatively newish trend. And I think there's a question around VCs and areas of investment. So this is an area where I do think there's a lot of new players coming in, and there's also a lot of VC attention in the space, as in Southeast Asia, especially, we are seeing a lot of new startups entering this domain. So Afterpay is one of the more established companies. So Klarna in the US, many of you would have heard of, is considered to be one of the pioneers. In Asia, I would say that role is probably Afterpay. And they've done a great job of really penetrating themselves with a lot of merchant acceptance points, right? So the value proposition for the customer is very simple. I, will buy my goods now, but I can pay later in interest-free installments. And as long as I continue to pay my installments on time, I don't incur a penalty or I don't have to pay anything extra. So at the same time, how do they make money, right? You may wonder. So the merchants actually give Afterpay a cut of their sale, because for the merchant, the Afterpay promise, especially on online websites, is becoming I would say like a sweetener for many of the customers to go ahead and make that impulse purchase, right? Because with impulse shopping, it's always like, how do you minimize the resistance for the customer to complete that point of commerce? And this is, this whole concept of buy now, pay later is actually helping drive a lot of those checkout rates. And Afterpay, from a technology standpoint, have also implemented a lot of risk algorithms, etc., right? And they also have tools that help check if at the point of signing up to this tool, if my card holder is able to do automated repayments, right? They have a capability to check if that works. And they're also able to look at the history and their machines learning algorithms to determine if a particular user is prone to default or not. And based off this, they actually do claim very high repayment rates and lesser than 2% of defaults. And there are, more companies in this space, like Hula is a Singapore-based company in this domain. And I think Atom, ATOME, is a new player. And definitely, I would say, if you're interested in startups and kind of startups getting evaluated at high numbers, do check out this domain. Now, moving on, I want to focus more, take another look at the merchant side of things, right? So another innovation that's happening and a trend is customers on one hand prefer convenience, right? So that's very simple from a cardholder standpoint. They are looking for tools that are, as seamless, as frictionless as possible. At the same time, on the other hand, there also needs to be high merchant acceptance for whatever payment technology that you're putting out there, right? So we also see a lot of innovation happening in the domain of merchant acquiring, in the domain of merchant tools. Stripe is a great company in the sense that they have done a great job of targeting this long tail of SMEs, right? So they have built bespoke tools and they've identified partners that actually help them come up with what is a combined value proposition, which is beyond payments, right? So as an SME owner, I'm more interested in making sure that my outstanding payables and my invoices are paid on time, right? So they have research that says over 50% of an SME's invoices are typically late. So the whole promise is about, let's change this late payment game, right? So they did an interesting integration recently whereby they integrated with this SME accounting cloud software from a company called Zero, again, which is active in many of the Asia Pacific markets, to help the SMEs integrate their outstanding payment invoices with the ability to do payment checkout right there from the invoice itself, right? And with this, they saw that the invoice collection rates significantly went up more than half the time as what it was before, right? And they were able to supplement this with tools like auto reminders, etc. So this then becomes a value proposition that's much beyond than just simple payments, right? So this is about giving the SME a tool that actually helps them keep their cash flows positive. And that's, the other strategy that a lot of these payment innovators are adopting, which is going beyond payments and addressing the merchant, from a business point, right? How can we help solve for the merchant's business problems? The last example I wanted to touch upon is, Revolut, which many of you would be familiar with. And broadly speaking, I wanted to look at the space of cross-border remittances, right? So this is, again, a domain where there's a lot of innovation happening. So again, innovation happens a lot because of necessity or because of inefficiencies. So cross-border is often plagued by a lot of high conversion rates, right? And there's always a lot of questions raised on the transparency of the fees. Many of us go through this experience of a bill shock, right? When you are shopping abroad and using, let's say, a card to make a purchase, or we are trying to find the best exchange rate that's available for us. So the likes of Revolut, TransferWise, we have a company called InstaRem in Asia, which are all dealing with this space, which is about how do they cut out this inefficiency of these hidden fees associated with cross-border money transfer, right? So their whole promise is again about no hidden fees, right? Revolut especially is interesting because they've again gone past that one use case of just cross-border remittances. So when they started out in the UK, this was their primary use case, and they were actually able to get a lot of stickiness on the platform with that. Now that they're expanding into Asia Pacific, they recently entered Singapore last year, and now they're slowly opening up in more markets in Asia. So their value proposition is now, again, if you go back to the original Paytm model, is following that, extending from one use case to becoming a full range of financial services provider, right? So they are becoming a player that's dealing with personal finance management. So they have tools that actually help you track how much spend you have made in a month, which can be categorized across the merchant category, right? So like as an acquirer, you are typically able to classify if my purchase is associated with dining or if it's associated with entertainment. And Revolut has done a great job in terms of their UI, where you can actually see how my purchases can rack up, right, against, beautiful looking charts and things like that. And they're also doing a good job with adjacent payment use cases like P2P transfers, bill splits, etc. So sorry, Memji, did you say something? Okay, that kind of brings me to the end of the examples, right? And let's look at the questions now. Some of the questions that were posed, and please feel free to chime in if any more questions. So going back to the first topic, there was a point on embedded commerce, right? And the embedded ecosystem. So that's pretty much what we saw is the strategy that the likes of Paytm, Grab, etc. are adopting. And we will increasingly see more and more non-financial institutions get into the space of, starting out with payment checkout, which is now expanding into more and more services that fall into a traditional financial services domain, right? Shopify is this player that's getting into this domain. We are seeing a lot of wallet providers in this space. We are seeing the likes of Apple, software OS providers in this domain as well. So it's, really that whole trend of, okay, I have an ecosystem where I have captured my customers' payment credentials and I have gotten their wallet share for this particular use case. Now, how can I continue to expand that wallet share by giving them access to more financial services? And this is precisely how, Alipay started out as well, right? So they had one use case and now they are an entire marketplace, which is built around that use case. There was a question on crypto, right? So what I do want to talk about, I mean, this is just two of our public announcements in the last 1 week is it's more on currency, right? I wouldn't even call it payments necessarily, but it's really, we are looking at a new form of digital currency, essentially. And in the last year, we've actually seen strong backing for crypto and digital currencies by regulators, right? I mean, that's a trend that's growing. So Visa recently announced that we will now be able to enable the settlement of payments in USD coin, which is a stable coin that is backed by the US dollar. So we are going to be piloting this capability with crypto.com, and we would be making it available more on a case-to-case basis to limited clients. When we put out a press release and there's a blog article around it, if anybody is interested. I think Manoj, you wanted to talk about crypto, so I can talk about it more from this lens. And I think this is more an endorsement on the fact that we believe that cryptocurrency, or I would call it more digital currency, is a space that's increasingly going to see interest from customers as well as from businesses. And we are taking this on more as a pilot proof of concept approach, but at the same time working with this whole CBDC concept, right, which is the central bank digital currencies framework. And it does fit into, like for a company like Visa, it does actually fit into that network of networks strategy that we adopt broadly when it comes to money movement. And it does fit into the strategy of many of our key clients, right? The large banks, especially, who are also looking to build out products with digital currency, and it equips us as a payment infrastructure provider to support them better. And it's also helping us evolve the backend infrastructure to support these kind of use cases. I'm going to pause here. There was another question on stored value. I don't remember who the question was. You can chime in if you want to elaborate on the question if you're on the call still. Was this more around a concept like Paytm wallet that you had in
Yeah,
mind?
I was just asking on the stored value, right? The float that you have, right, versus just a real-time transaction. Like there are two approaches a new entrant can take. Are there any trade-offs between the two? What would you suggest, like for a new entrant? Where is the real value for a new entrant to come in from your perspective?
Yeah, so if you look at traditional payments infrastructure, it's still four-party modeling, right? So meaning there is a cardholder, there is an issuer, there is an acquirer, and there is a merchant. And when it comes to some of these, and these are what we call as open loop payments, right? Because it's a network that's open to acceptance on both sides of merchants and customers, cardholders. But when we see some of these stored value wallet providers, it's somewhat, I would call it almost a three-party model, right? Whereby we are eliminating one intermediary, if you could call it that, in this value chain. And from an economic standpoint, the merchant actually tends to view this as more favorable for them because the share that they may pay to an incumbent payment provider might be much higher than what they would provide to the stored value player, right? So if the question is around as an entrant in this wallet space, economic wise, it does make sense to address an inefficiency, right? What are you trying to solve for? At the same time, it could be the story of like Paytm, right? Which was really taking on a very valid customer pain point and solving for that customer pain point. But at the same time, they were riding on the existing financial services rails, right? So it was still leveraging a bank account, or it could even leverage a card to top up that stored value account, versus you have a pass-through stored value, which is, I keep having a wallet and drawing funds from the wallet, right? So I think there's no one size fits all, right? But it's if you're looking at a market where long tail merchant adoption is driven by merchant economics, high volume of low ticket transactions, merchants tend to get incentivized by higher, better rates, right? So there is an opportunity which is going in with a much better financial model for them. But if you're trying to solve for a customer pain point, probably it might still work even if you're riding on the existing financial services rails. I mean,
and then for, let's say, you have a scenario on the same stored value, $10 per customer, and let's say you have 1 million customers, right? So you have roughly like $10 million in the float for this company. Let's say Paytm, or doesn't matter anymore. Are there any, and this money sitting in, right? In their own company, somewhere form. I'm sure there are some countries with regulations, some are pretty loosely defined. can these players go and do something with this money more creatively and then get more income generated while float this money?
That's kind of where they're going with banking licenses, right? So, how does a bank make money, right? If you look at the bank's P&L, on one hand, I have my deposits, on the other hand, I have my loans. My deposits are my liabilities, and my loans are my assets, which I lend out and I get interest payments from. Now, as a Paytm, before I couldn't lend, and I believe as per their current, now that they've gotten a banking license, they're actually expanding into becoming a payments bank, and they're getting some of the privileges of a traditional bank that would help them accrue interest, right? So I would say that answer of like interest is the holy grail, right? When it comes to making, maximizing your profitability, but it's largely governed by regulation, right? So even if you're looking at the likes of M-Pesa in Africa, right? So they were the pioneers, I would say, in many ways of this whole concept of stored value. They also started out with similar use cases, and then they eventually, started doing use cases around micro lending, right? Whereby they're, using that float and, keeping that float. At the same time, they're able to lend it out for a subset of customers and gain money when, customers are paying them the interest. So for me, that is the most viable thing to do with the float and is somewhat governed by regulations.
Thank you. Thank you.
Did I take everybody's questions? If not, please feel free to chime in.
Joshua, Harry, and Naman, were there things that you were thinking about early on in the start of this session that you haven't had your answers provided yet, or you want to try and reconfirm some of your understanding? Anything?
Just to touch upon the startup ecosystem, do you think like within the ASEAN, the Southeast Asian market, more countries are following the US step, or they're tend towards more like on the prepayment Alipay model? Because we've seen like some companies like adding, right, like the change from the 4-party payment model into the 3-party skip the scheme model. Like, are those the trend that you're seeing, and what are some of the most interesting startups that you think can be the future if the regulations allow?
Yeah, I wish I knew who all the startups were, but definitely willing to share my thoughts. What's the name you mentioned, Ardian? The one that you just mentioned?
Yeah, it's ADYEN, Adian.
Ardian, okay, so the
Yeah,
payments.
I don't know how to pronounce it, but
Yeah, okay, I got it. Yeah, so they're more, so they simplify payments processing, right?
Yep.
So I think going back to your original point about US, is Asia going to follow the US, or is it going to follow more like China model? Like I think, as I also mentioned earlier on, I do think that in many of our markets in Asia are so unique, and it's this, kind of this spidery web of evolution that we are seeing. And some of the innovation that we've seen come out of Asia has actually been taken on into the West as well, right? So, and this is because of the fact that Asia is quite unique in the, digital first aspect of, people getting access to internet and payments for the first time on their phone, right, which didn't happen in the US. So I actually see a reverse trend in that aspect. China is interesting, right, in the sense of QR codes especially. So they kind of led the way of standardizing QR code based acceptance, and to an extent Paytm did that in India, and now we see QR codes are completely ubiquitous everywhere. But at the same time, I would say there are unique use cases, right? So like I mentioned, the buy now pay later is an area which is coming up as one of the hot topics with a lot of fintechs and fintech valuations. Like a lot of new companies are being founded in that space. There are names, feel free to reach out to me separately. I'm happy to share the names of the companies or startups that I'm familiar with in these domains. PFM, personal finance management, is an area where we're seeing a lot of payment services and fintechs. So, what we see is essentially this, what we call as this unbundling of banking, right, as a trend. And within that, we've seen that, okay, lending is a space which is the most heavily regulated and typically not so easy for a fintech to get into. But there are adjacent areas like bill split, P2P, peer-to-peer money transfer. There is spaces like budgeting, to an extent, consumer micro lending, simplified checkout, etc., which are being tackled on by some of the fintechs. There are some fintechs in Australia who are doing a really cool job with digital receipts, right? And they have a whole value proposition around going green and being environmentally friendly with the digital receipts, and have done a great job of actually connecting with a wide range of merchants. So a company called Slip, SLYP, that are doing some really good work here. And that's a space from a sustainability standpoint we are seeing as a trend that probably is going to come from the West and to Asia, right? So that trend, I think, is starting in Europe, and we are seeing that to an extent in Australia, and I'm expecting that to pick up in the more mature digital markets. So yeah, I think those are some of the names and some of the areas, but the space is quite vast, and happy to talk more, or share some of the names one-to-one if you want to reach out to me separately. Yeah. Any further questions?
Yeah, hi Bhavna. So earlier I mentioned, I think, about embedded finance. So around that, I was wondering, so there's this VC thesis, I think, that every company in the future will become a fintech, in the sense that payments will be embedded in all consumer companies. And I was wondering that who is benefiting from this? Is it payment networks like Visa, or is it banks who are directly getting involved with payments infra providers like Rails Bank or something?
Yeah, so I think there's the infrastructure provider, right, who is a payment facilitator, that for many years that role was relegated to a few big large banks and big large payments network providers. But what's happened with embedded commerce is that the definition of a payment facilitator has increased, right? So we see like wallets, telcos, Grab, we see more and more non-financial institutions come into this domain. So if you were to look at who's benefiting from it, I think it's, again, not a one size fits all approach, but where I see one entity that's definitely benefiting is the consumer, right? Because for the consumer now, there is a lot of choice available, and which is making a lot of these payment experiences become really frictionless and very secure at the same time. And we might see that new wallet providers are actually throwing in cashbacks and discounts and offers as a tool to get people onto their ecosystem. And a lot of this is happening off the back of VC funding, right? And there has been criticism in the past, even of Paytm, right, that it was not probably going to be a sustainable model because of the vast amount of cashbacks that they were dealing out. But I think some of these business models have succeeded to kind of keep their customers in that ecosystem, right? So I would say it's a bit of a situation where regulation is trying to keep everybody on a level ground, right? So we have seen that sometimes fintechs might come in and try to encroach into what is a traditional banking domain, and it tends to be more of a competition whereby the fintech is eating the bank's lunch, and the regulator is now trying to play that role, and they play that role into different degrees in different markets. Like I think Singapore is probably more regulated, and uh, keeping a very neutral stance on giving a fair treatment to the banking players as well as the new entrants, versus in slightly more unregulated markets where you don't have that established, like in some of the markets in Africa, for example, the fintechs tend to kind of have that starting edge, right, because of the lack of regulation. So it is really, at the end of the day, I would say, whoever is keeping the highest share. So if it's a wallet provider who gets high adoption on their ecosystem and manage to cut out traditional banking players out of it, they get to benefit. But at the same time, if the bank is smart enough to keep their customers engaged on their ecosystem by innovating with good and innovative experiences, they benefit as well. So I would still stick to my answer: the customer benefits, and to a large extent, merchants are benefiting now because merchants are also getting choice from different acquiring partners. But in between, it's largely the economics that would determine who wins out, and the value chain is quite vast here. So not one size fits all again. So
That makes sense. Thank you.
I know we've overshot the time. So anything further? Happy to take that.
Sure, the silence.
I had a
Seems-
different question if you still have a minute or two.
Yeah,
ahead.
Naman, go ahead.
So I was thinking, so we touched upon decentralized networks and cryptocurrencies, right? So I was just wondering, like, if payments move towards a decentralized network, where does a payments network like a Visa or MasterCard fit in that future world?
So like the announcement we just made, right, which is the partnership with crypto.com, it's a digital currency, right? So we have currency today, which is USD, and now we have a new currency, which is USD coin, right? But think of it as a new currency, but still leveraging the existing framework of settlement that Visa is doing. So to some extent, it doesn't change things for us. It's that we are dealing with a different currency in terms of settlement. Definitely the equation does change in between who are the parties associated. And if I were to look at it from Visa lens, I think we view this as a similar settlement opportunity, but using a new digital currency. And this answer would change if you ask this question to a bank, I'm sure.
Yeah, that makes sense. Thank you.
Any other questions, concerns, quantum dreams about digital payments in Asia, the future? Remember, Bhavana is the queen of digital payments, so.
Thanks, MJ. No pressure again. Yeah.
Patrick, I know that you wanted to also make a couple of announcements, I was told.
Thanks, MJ. I think I was going to speak somewhat in terms of the sessions that we have, but I don't have any particular announcements aside from we do have more sessions coming up, and I did want to take a moment as well to thank Bhavana as one of our mentors for putting on a great session. I think this is fantastic that we want to get more and more of the students involved in these. I think it's certainly a value add to hear firsthand from industry leaders and what's happening. So just a big thank you to Bhavana again for taking the time today.
Oh, my pleasure. Thanks everybody for staying on, and thanks for all the engaged participation. Thanks Adrian, MJ, and Patrick for putting this together.
Sure. Patrick, that's your cue. You wanted to say something about the future sessions?
No, I think MJ, I kind of covered it. So we do have
Okay.
more coming. I know there's some conversations we're having with mentors on the side, and we will be putting them out there in the Telegram channel. So I think I've sort of said what I plan to. I know there's interest, and hopefully we get more students coming in, and I think we'll also be posting this up on LinkedIn. We've discussed with Bhavana, so we'll try to get to a point where folks that can't make it can potentially participate with the version that we post up afterwards. So nope, I'm good. So I think we probably bring it to a close here. And again, great job, Bhavana, and also Adrian and MJ, and just making sure bringing these things together. They're not easy to organize. They're not easy to coordinate, but I think these we're off to a good start, certainly with them.
Sure. So thank you, Naman, Joshua, and Harry. And well, I think there was Rojit, right, who was earlier.
Yeah,
today.
Mano just dropped off. So
yeah.
again,
Manu.
everyone, thank you. And I think we can end the call and the meeting for today. And have a great afternoon.
Yeah. Happy Easter.
Thank you, Bhavana.
Thanks,
Great session.
everybody.
Thank
Have
you,
a
everyone.
good weekend, Easter weekend. Thank you. Bye.
Cheers. Bye-bye.